All right, if you're watching this video, you are probably an investor or a soon-to-be investor, and you want to know about DSCR loans, and you probably already know what that means. DSCR is short for debt service coverage ratio, and I always just start by saying, whenever I'm explaining this to somebody, it's probably one of the easiest mortgages that you can get. Even if you're not an investor right now in real estate, even if you don't have experience as a landlord and managing rental properties, if you own your home right now, your primary residence, you can still get a DSCR loan. And so I want to talk to you about that. So the big benefit to a DSCR loan is we are ignoring documenting your employment income, your business income. We're ignoring all of your personal income. We're not trying to document that with tax returns or pay stubs or all that sort of thing. We're just looking at the rent that property that you're buying is going to bring in. And we look at that side by side with the mortgage payment and make sure that rent covers your mortgage payment. If it does, and if you've got your down payment, you've got enough reserves, and your credit score is even in the 700s, we've got a good deal for you, and you can go buy that property. Another good thing about this program is you can buy things like short-term rentals. You can buy things like condos that may not meet Fannie Mae's guidelines or Freddie Mac's guidelines. So just a lot of versatility here. You can buy a property in an LLC. And so what I've noticed is a lot of investors, what they'll do is they'll try to get as many conventional loans as they can, because conventional loans typically have a little bit better rate than some of these DSCR loans. The rate might be a little bit higher, but what they'll do is they'll max out at 10 properties financed. And from there, they'll either start buying properties with cash, which I wouldn't recommend doing. I would try to leverage these properties and make more money on the money that you're investing. They'll either buy them with cash or they'll do these debt service coverage ratio loans, which, like I said, I can't say enough good things about them. They're not for everybody, but for somebody who's, even if you're just trying to get into real estate investing and you've got enough down payment, you're trying to place some cash, and this may be your way to get into an investment property, I'd say that might be a good fit. But if you're a seasoned investor, you know all about these. And one thing I would say is, as a mortgage broker, I've got dozens and dozens of portfolio lenders and non-QM lenders who aren't selling their loans to Fannie Mae. They're keeping these loans in their own hedge funds or in their own portfolio, and they do these types of loans. And all of their requirements vary a little bit in terms of whether or not they do short-term rentals or whether or not they'll do non-warrantable condos, this and that. But we've got a lot of different options, and I can go shop all of them as a mortgage broker and go find the best rate for you, find the best terms, close quickly. We'll get that appraisal ordered. We'll document your down payment, your reserves, your credit score, all those sorts of things, and we're off to the races. So hopefully this is helpful to you. If you want to talk more about it, give me a call. I'm at 404-561-6695. Again, my name is Ty Keller. I'm with Edge Home Finance, and you can find me at tyclosesloans.com. Encourage you to reach out if you have any questions. I'd love to help you. So thanks for watching. We'll catch you in the next video.